What's up, Option Informants? This is Joe Rodriguez here with a quick daily option update. I know I haven't recorded in some time. I finally got some audio equipment and was excited to record. So instead of posting, I've been trying to figure out how to record quality videos. Let me take you into what we've been up to. So a few weeks ago, we had posted an AMD option trade, and let me show you what that looks like on our end. Cost or credit in this case was 1640. We're currently around 25% of that, sitting at 420. So we're just waiting on some more time here. We're dead center. We may take this off sometime soon here because it's only been a couple weeks and we're already at 25% profit. I'd hate to see him move upward where we get to like the 60 range and then profits start falling off, and then we have to wait for price to move back or volatility to decrease in order to buy this back at a lower price. So let's move on to the SPX. So we put on a position in the SPX, a weekly double calendar on Thursday. Turns out that we booked 120 profit on Friday. So normally we wait till the day before or the day of expiration for these. In this case, we booked 120 profit in one day, recentered price so that it gives us a better opportunity of profiting. And let me show you what that looks like. I'll take you to Thinkorswim only because Tasty for double calendars, their software doesn't analyze as good. So here is what Friday's double calendar looks like. There was a volatility crush, therefore this sagged down. The sag was not like this, but luckily price moved out of the way of the sag and we are sitting on the call side waiting on some profits. If this moves any further up and starts to test this position, I will end up taking this off because we put on another double calendar today. If price moves down and starts to test this break even zone and the sag line here, I expect if price is moving down for a volatility increase, therefore lifting this sag and giving us more breathing room to profit. And let me show you the trade that we have today. So we recentered price again today. There was a small move upward and we still have a good chance of profiting within the next 2 days. So we're just going to wait on some time there and see how this plays out. Let's move into Macy's. So we have 52 days to expiration on Macy's. It's looking pretty good. We're at 55 for a P&L open. The credit was 350. We added this trade to add more positive delta to our portfolio to stay delta neutral. So this is what it looks like on the analysis graph. Macy's had earnings today, or has earnings in the morning tomorrow. And if we see Macy's spike up on better than expected earnings, two things are going to happen. This P&L line is going to extend upward and price is going to move further into this line. Basically, volatility will get crushed, and that will increase where this P&L line goes. So this P&L line here should move up, and then price should move further into that range. So we'll see what happens tomorrow. If that doesn't happen, we'll end up holding a bit longer, but if it does, we'll probably book our profits, take our winnings, and use our buying power elsewhere. And then we have IWM, which we have two short positions in. We will start with our long put option. So what we did 2 weeks ago was we booked profit, 30% profit on a call credit spread, which is a short sentiment play. We added that to our portfolio again to stay delta neutral. We booked in one day 30% profit, then rolled that out for another 30% profit within the next week or so, and then decided to turn this into a long put spread as opposed to a short credit spread. And we did this because this takes advantage of a volatility increase, which is correlated with a downward movement in the market. So hopefully we could take double advantage of that. The downside is that we have a pretty big hit here if we let price get away from us. So it's just something to watch. But you can see we still have a 68% chance here. So we're just waiting on some more time there. Oh, let me go back to IWM. So we put this on yesterday. This is our back ratios. There's a couple articles on optioninformance.com explaining why we put these on. But essentially we look for two things here. We're looking to add negative delta to our portfolio to get closer to delta neutral, and we're going to be protected against huge market downswings. You could see this almost exponential increase in price or increase in profit as price is driven down. Another thing is we're protected to pretty much lose whatever the debit's paid, but only under certain circumstances. And that circumstance is before this P&L line starts to sag. So let me show you what the sag looks like in this P&L line, and then we can move on. Let's put this a little further out. So what happens is if price stayed, if the P&L stayed where it was currently, then we could just potentially lose whatever we paid for the debit. But when the sag happens, we start to really increase in our max loss. So the idea here is to get these far enough out to where the P&L line stays even, and then get out before the sag starts to happen. So that's usually around 60 days to expiration. So we'll be looking to close around that time if we're not booking a profit. And then we have this SPY, which was a option informant double diagonal. We like to pull these on Mondays and Tuesdays under very certain circumstances. And let me show you what that looks like. So this play is unique in the sense that it expires tomorrow, but I'm taking the extra time to hold it only because it can provide extra insurance around our double SPX weekly double calendars, because they kind of sit within this range here. And if price decides to skyrocket one way or another, we have that extra protection of making some money and kind of mitigating some of our losses, potential losses. And also, we're already at max loss for this sag, so any move will benefit me either way, to mitigating some losses that I might take on this. We'll see what happens tomorrow. I also want to note when I say max loss for the sag, I really don't mean max loss for this trade. Max loss is sitting at around 1020 for this entire trade. But right now I think we're down about 200, and any move in either direction will help mitigate some of that. So we're down 202. And moving into Starbucks, which is a great example of how we like to trade options at Option Informants. We like to find areas of strong support and resistance, and this is a strong support area that's been tested multiple times by price here, and it still is staying in the green. So we have complete confidence that this is going to cash. We just need some more time. I hope you guys liked this update, and if you did, please click like and subscribe, and leave a comment below if you have any questions or if you'd like to see any more updates.